Have you ever noticed that the people who seem the most desperate to prove they are winning are often the ones quietly losing? Go to any major city center, whether it is London, Frankfurt, or New York, around 6 p.m. You will see them, young professionals leaving glass office buildings, wearing tailored suits, holding premium coffee, and unlocking entry-level German luxury sedans. To the outside world, they are the definition of the modern success story. But if you look past the polished exterior and into their bank accounts, a completely different story emerges. It is a story of quiet panic, mathematical traps, and a self-imposed financial burden that destroys wealth before it even has a chance to grow. Let us look at the reality of a modern corporate professional in the US or Europe. Let us call him David. David is 26 and just secured a promotion at his firm, bringing his salary to $75,000 a year, or roughly 70,000 euros if he is in Germany or France. On paper, this is a fantastic income for someone his age. But paper wealth is not real wealth. After federal taxes, state taxes, and health insurance deductions, David's monthly take-home pay is roughly $4,600. Now, the lifestyle must match the new title. David rents a modern one-bedroom apartment closer to the city center because that is where his peers live. That is $1,800 a month. He finances a 3-year-old BMW because parking a beat-up hatchback in the company lot feels uncomfortable. The monthly payment is $450 plus another $200 for comprehensive insurance and fuel. Then come the student loans, a standard $300 a month. Add a moderate $600 for groceries, utilities, and internet. Finally, there is the social upkeep. Weekend brunches, dinners with clients, and clothes that fit the corporate dress code. That absorbs another $800. Before the month even ends, David has spent $4,150. He is left with $450. One minor dental emergency or a flight to a friend's wedding completely wipes out his savings for the quarter. David does not realize it, but he is paying a massive, unlisted tax. It is the invisible tax of looking successful. The system error here is not a lack of income. It is a fundamental misunderstanding of what a dollar actually represents. When David buys a $45,000 car on finance, he does not just trade $450 a month. He trades the future freedom that money could have purchased. Let us look at the simple math. If David had chosen a reliable used vehicle and kept his housing costs modest, he could easily save an extra $800 every month. If he invested that $800 monthly into a broad market index fund, yielding a conservative 7% annual return, that money would grow to over $130,000 in 10 years. In 30 years, it becomes nearly $1 million. When David chooses the luxury car and the premium apartment today, he isn't just spending his current income. He is actively sacrificing a $1 million future self just to look wealthy to strangers on a Tuesday afternoon. Why do intelligent people fall into this loop? The psychology is deeply rooted in our need for tribal status. For centuries, human beings used visible cues to signal their place in the hierarchy. Today, society tells us that your worth as a professional is directly tied to your consumption. If you are smart, you must be rich. If you are rich, you must own expensive things. We live in a culture that worships the appearance of wealth over the mechanics of wealth. If this cycle continues ignored for 10 or 15 years, the long-term impact is a golden cage. You become trapped in a job you might grow to dislike because your high fixed expenses require you to maintain that exact income level. You cannot take a risk on a new business startup. You cannot change careers, and you cannot take a 6-month sabbatical. You become completely fragile to economic downturns. Financially intelligent individuals operate on a completely different psychological framework. They realize that true wealth is invisible. It is the money you do not spend. It is the investments in the market, the equity in assets, and the liquid cash in the bank. Wealth is not about buying things to show people how much money you have. Wealth is the luxury of not thinking about money, the autonomy to control your time, and the freedom to say no to situations that do not serve you. They understand that a high income is merely raw material. It only becomes wealth if you have the discipline to leave it alone. There is no need to live like an ascetic or feel guilty for enjoying nice things. The lesson is simply to recognize the trade-off. Every time you upgrade your lifestyle to match an expectation, you pay a tax on your future independence. If you found value in this perspective and want to explore the reality of modern finance without the hype, consider subscribing to the channel. Thank you for watching.